Today, I'm going to show you a technique that I recently developed. It's a method of trading with blank charts using a zone technique that has been proven in the gold market to yield profits of up to 500% within just 2 years, with a win rate of up to 73%. This video will teach you how to set up the template in detail and delve into the step-by-step trading method, complete with real trading examples that will help you understand and apply it immediately. For those who like trading on a clean screen without any indicators distracting them, this is for you. Hi there. As usual, you don't have to believe me, but trust the statistics. Let's take a look at the full 2-year historical statistics of this system, which others don't provide, but we do, to give you confidence in trading. Don't miss out on such an accurate and powerful technique. Make sure to subscribe and hit the notification bell. You can also receive free techniques via the line ad school displayed on the screen right now. If you're ready, let's go. That's it for the intense testing over the past 2 years from 2023 to 2025. The test results show an equity curve rising steeply like this. I conducted this system test on a 4-hour time frame gold chart using a broker with an FC license, a world-class Forex license. Therefore, your investment is safe and you can rest assured about the extremely smooth deposit and withdrawal process. The spreads are very low, ranking among the top on MyFXbook. If you don't believe it, you can try it out yourself. On MyFXbook, because my main strategy is using this broker, the equity rises intensely like this, so let's see what happened over the past 2 years. Why was this system able to consistently turn a profit? I used a listed trade for this test at 5% with a capital of $10,000 and an R of 1.5 times. You'll see that the win rate is the first factor that caused the equity curve in the portfolio to rise to this level, which is 73.91%. This means that if you trade 10 times, you have a chance to win up to a very intense level, I must say. It's extremely accurate and very precise for this system over the past 2 years, which is why it was able to turn a P&L profit of 531.79%. Therefore, your capital of $10,000 would grow to a profit of $53,179. A total of 46 trades were made, with 34 wins and only 12 losses. The profit factor is interesting, reaching as high as 4.25. Is the maximum high, it's 14.26 times. So it's considered a low-risk system, but it can turn a very high profit over the past 2 years. This is the highlight of the gold chart in this episode. Let's delve into the trading method step by step. Today, I have good news for traders who already have an account with Tickmill broker or are considering opening an account. Champion Trade School, in collaboration with Tickmill broker, is launching a quality trading signal room, AI Master Signal, which you can use for free to receive real-time trading signals. For both the gold and Forex markets, it uses the latest version of AI, which has been tested in real markets for over 5 years, generating a total profit of over 1,000%. Joining is very easy. Simply open an account with Tickmill broker through the link below the video, deposit $700, fill out the form to join the signal room, and then wait for the team to verify. You will be invited to the room immediately. Don't wait too long. Golden opportunities like this don't come often. AI Master Signal, the trading assistant of the future, is accessible to you for free. Next, it's something that you all need to know before you can make a profit, which is counting swing highs and swing lows. Today, I will count swing highs and swing lows using the 5 forward, 5 backward method. For those who have been following me for the past 14 years, which is quite a long time, you probably already know how to do this. But if this is your first time watching my video, I will teach it again. Swing highs and lows are quite simple. They rely on the same 5 forward, 5 backward counting principle. The pivot point at the top, like this, is called a swing high, represented by the letter H. How do you count a swing high? You need to use the high as the main point and look to the left. There should be 5 bars with highs lower than the main bar. 1, 2, 3, 4, 5. You will notice that all the highs are lower than the main bar. Then look to the right, also 5 bars, and the highs must be lower than the high of the main bar. 1, 2, 3, 4. 5. If there are 5 bars in front and 5 bars behind like this, with highs lower than the main bar, it will be a swing high. As for counting a swing low, it also uses 5 bars in front and 5 bars behind, but in the opposite direction. For example, here's a swing low pivot point. How do I know? By comparing the lows as the main point. Look to the left for 5 bars, and they must have lows that are higher. Look at the main 5 bars, 2, 3, 4, and 5. Next, look to the right for another 5 bars that have lows higher than the main bar. Not counting the main bar itself. So 1, 2, 3, 4, and 5. If it's like this, you can easily identify the swing low, right? It's not difficult at all. Oh, once you can identify the swing high and swing low, you can use them to create the key low zone, say YASAC. However, the tool used to filter trends in this system is another important tool, which is the EMA 150. Make sure not to write it down incorrectly, as there has been confusion about this before. Each episode has different optimizations, and as mentioned, each strategy, product, and time frame has different varieties. Their behaviors are not the same. So, it wouldn't be possible to use EMA 200 for every system, every episode, and every product. We need to find the value that is appropriate. However, in the class or in the AI that I and over 1,000 others are using, now we don't have to find it ourselves. We use AI optimization for us. Oh, the convenience for those using our trading robots or the trading course, indeed. For now, let's go manual for those studying via YouTube. Okay, so what we will see is just a single EMA 150. It's used as a trend filter, and it has nothing to do with trading itself. For trading, we use a plain chart. Okay, let me show you an example of an uptrend first. An example of trading in an uptrend, there are 5 steps. Let's go quickly so we don't waste time. Step 1 is very simple. If we are going to trade an uptrend, we will use this EMA line 150 to divide the trend. Divide. If the closing price or the chart is floating above like this, we will trade only on the buy side. But if in this case, the chart is below and the closing price is mainly below the EMA 150, we will trade only on the sell side. So in this case, we will trade on the buy side, right? The price must close above the EMA 150. At this point, it already closes higher, so it automatically enters the first set. I'm sure everyone understands this. Moving on to step 2, I will wait for a swing to occur. What is a swing low? I've already taught how to count it earlier. For those who skipped to this part, I recommend going back to watch the part where I teach how to count swing highs and lows. As for swing lows, I won't count them for you again because I've already taught it. From here, this is the pattern of a swing low or a pivot point at the bottom. If you encounter it like this with 5 bars before and after, you have already reached step 2, which means you found a swing low in an uptrend. Let's move on to step 3, and it follows directly. Step 3 involves marking the zone. Listen carefully to how to mark the zone. You should mark from the tail to the body, like this, extending to the right, okay? But remember, it can only be a swing low if it completes 5 bars on the right side first. 1, 2, 3, 4, 5. Got it? Only then will we know that this is a... Because if there are only 1, 2, 3, 4, and the 5th bar closes down like this, then it won't be a swing low. Therefore, it needs to be 5 bars before and 5 bars after. Once we've marked the zone in step 3, we move on to step 4. The next step is very simple, which is waiting for a retracement into the zone. Whenever the price bounces back into the zone like this, when it pokes in like this, you see it retraces into the zone here. This is considered step 4, similar to a final poke into the zone before it goes up. However, we don't know if it will go up or not, but at least there must be a retracement back into the key zone first. This is step 4. Moving on to step 5. Wait until a green candle forms and closes above the zone. Listen carefully, there are 2 conditions I mentioned. 1, the candle must be green. 2, it must close above the zone. This candle closes above the zone, right? The zone is here. The one drawn is the key zone, and this is a green candle. Therefore, this candle is the setup candle in step 5. Once you find the setup candle, you can place your order at the closing price. Place the stop loss carefully at the low of the setup candle, 1.5 times. It's already closed. This is if trading in an uptrend. Let's continue discussing the downtrend case, which is the opposite of the uptrend. So the first thing is to use the EMA filter. The closing price must be below the 150 EMA, which it already is. Next, step 2, as mentioned earlier in the uptrend, we look for a swing low. And here, conversely, we will look for a swing high, which is the pivot point at the top. For those using the MT platform, I have a swing high indicator available. You can request it. For those using Tickmill broker, open an account under the video clip and you can get it for free. Here, it's 1234, missing one more bar. This bar is the main bar and serves as the pivot point, which has already formed at the top in step 2. Moving on to step 3, once you find the swing high, draw the zone out towards the right side like this, and the method is to draw from the high to the body and then wait for the next step, which is to wait for it to retrace. The important point is that it must not close above the zone or break through it. If it breaks through, cancel everything immediately. Therefore, here it has already retraced at our killer zone right here in this zone area. All right, the candle that comes in is this one, starting from the green candle. This is step 4. Next, we will look for the setup candle, which is step 5. The setup in step 5 is important because it must have 2 characteristics. First, the closing price must close below the zone. You can see here that the closing price has successfully closed below the zone. Therefore, this is the first correct checklist. The second checklist is that it must be a red candle. Here, it is indeed a red candle. Therefore, both conditions are met. So, this candle is the setup candle where we will place our order. You can open a sell position right at the closing price with the high and low set at a risk-reward ratio of 1.5 times. Here, the TP has been closed successfully, see? Next, if you want to learn about trees, how can you do it? It's not difficult at all here. Do you see that this area is also a swing high? Therefore, you can draw a frame out as a filler zone in the same way, extending it to the right like this. Look carefully. The method of drawing is the same as before. Draw close to the high of the body, and then wait for the graph to retrace back again. Here, there has already been a retrace, see? Then there's a red bar, and the closing price is lower as well. In this case, I will open a sell position again and place the stop loss at the high. This technique will have a very close take profit, and the lot size will be quite large. Why? Because the entry point and stop loss are very narrow. I closed 2 positions smoothly using the same zone. Let's look at another example. By seeing the overall picture, you can tell that we are currently in an uptrend. Therefore, you can prepare to open a long position, but you cannot open it yet if the conditions are not met. This means we need to look for a swing low, in the case that we are in an uptrend zone. Here I can already see the swing low. This is the main bar, 112.345, and the main 5 is complete. Once you find the swing low, automatically your hand will drag the zone to the right. You can drag it as long as you want like this. After that, wait for the retrace to come back, but it must not break the low. This means in terms of the closing price, it must not break the low. Here, there has been a retrace back already. We have to see if the price will drop and close below the low or not. If it breaks the low, the trend might change, and we will cancel everything again. We will not open a buy position. It's easy to manage. When you need to escape, you must know how to escape, but here it hasn't broken. Not only has it not broken, but there is also a setup bar that has formed. Which bar? This one. Let me go back so everyone can see clearly the bar that managed to break out of the zone. Now actually, you need to be precise in setting this up. This is about setting the chiller zone from the low to the body. Then you will see the setup bar and how it closes. It's higher than the zone. Therefore, the setup bar is this one. After that, we can place a buy order immediately. Place the stop loss at the low with a slight buffer around 1.5 times. This is a simple trading setup. 3 to 4 bars and it's done. There's nothing complicated in this episode. I hope this is another system that friends can grasp. The technical zone has proven to be profitable, achieving up to 500% in just 2 years with a win rate of 73%. Whether you're a beginner or experienced, you can use it immediately. If you like this kind of video, don't forget to like, share, and subscribe to notifications so you won't miss more good techniques like this. For today's video, for those who have applied it and seen results, don't forget to comment below. If you want me to create content about any trading system, feel free to comment and let me know. If you have any issues, you can add Line Test School to ask questions anytime. For now, I must say goodbye. See you next year. It's going to be intense. Goodbye.